Good evening, guys. Sterling here with the daily market preview for November the 28th, 2017. Let's go ahead and look at the chart here of the pound to begin with. And the pound had an upper level of 33.53. 33.53 was up a little bit higher right here. And as you can see, we didn't have any other upper level beyond 33.53. So that was our big upper level. So that level there at one spot 33.53 would have been the final upper, or would have been the only upper point. So we came into one spot 33.53. You get the break of the level. It starts right here. This candle doesn't quite break by 3 pips, though, only breaks by 1.8. This is the candle that does break by 3 pips. This candle breaks by a total of 3.6 pips. So that creates the break. The first candle is again right here. Second candle doesn't confirm. Third candle doesn't confirm. This misses by a tenth. And then the fourth candle does confirm. So fourth candle provides the confirmation. Fifth candle would provide the pullback for the entry. The only thing is this is the 6:30 a.m. candle. We don't take entries between 6:30 to 8 o'clock a.m. Eastern. So if this was a candle prior, then the entry becomes valid. Being that this is the 6:30 candle, the entry would have to come after 6:30, have to come at least 6:30 and a tenth of a second, or a 10:30, 6:30 and a second, or whatever it was. In this case, it's 16 pips away at the start, so you're going to have to wait for at least some pullback. But the point is, with a mechanical rule set, when you have something that's outside that rule set, it's either satisfying the rule or it's not. Now, there's certain aspects of the rules that we have in place that aren't 100% mechanical. Time is one of those factors that is mechanical, as there's not really any discretion as to whether the candle is past 6:30 or not. Is the trade being taken between 6:30 to 8 o'clock in the morning? If it is between that time, then that's not a valid setup. So anyways, as far as the setup goes, mechanically, nothing wrong with it other than the aspect of time going in between that 6:30 to 8 o'clock window. As we look above that point, there was nothing else to the upside. So any other upper level, there just wasn't anything in place, and therefore no trade. Couldn't take a backside trade because you didn't have a clean break of that level. You didn't have a backside setup off it anyways, so it really didn't matter. What you did have is a very strong reversal today. That was a total of about 68 pips. It wasn't quite 90% of the ADR. If it was 90% of the ADR, if it had broken down a little bit lower, I'd be happy to call that a first push down. But that did not happen. Therefore, we continue with the open bias. And that means today, upper points, since we didn't have any other upper points, just like yesterday, any upper point we have today is going to be a newly created level. That means 33.79 is going to be the first point that we have in place today. As we look at lower levels, go out to the hourly chart. Yesterday we had 2 points. Nothing about our lower levels are going to change. Lower levels for the pound were 32.85 as well as 32.19. So 32.85 is still in play, as well as 32.19. Nothing about those 2 points has changed. We'll go and take a quick look at that. Here's the level from the 24th. This is, again, the 24th of November. That level is 85, 32.85. So 32.85 is the first lower point, then 32.19. Those 2 points will stay in play. If you want to go back over why those 2 points are in, you can go back over yesterday's preview, as we've already covered. Already covered those 2 points. Going over to the euro. The euro here today also had a big reversal down. The push down that we had was a total. Let me get you an exact figure here. I think it was 66 pips. I remember when I measured it earlier, but just want to double check. Nope, 65. Pretty much same point, and that is it is over 90% of the ADR, and that means we can treat that as a valid first push to the downside. So with that being a first push down, the question is, do we have a level from which we're looking to take the setup? The backside of this level is a really solid point. This point would be, again, a point I'd like to use if you have a clean break through it. If you look at this level here, you can see you can't quite round up to 16 because 16 goes into 19. 16 goes into the body of that candle in 1915. That's where you'd have to put the level. You can see you didn't quite have a clean break of that point. It's breaking by a tenth. Now, what I'm going to do here is a little bit different. I'm going to be hitting the mechanical rule, but I'm going to skirt the mechanical rule just so I can use that level. And I'm going to show you guys what I'm going to do to essentially do that. You won't see me do this very often, but in this case, we have no other option on the level, and that is it's a good point. It's a very good point because, number one, you have no other option you had to me, when the market is testing above new highs and you see this strong of a rejection at the end of New York, it almost 80-90% of the time guarantees continued downside if it's downside or upside, depending on the direction of that move. But when that type of move happens, and then New York, the end of New York makes that strong reversal, that's one of the moves that has one of the strongest follow-throughs the next day. It's not something that's part of necessarily the DTFL rule set, but it's one of those kind of nuances of the market that I'll talk about, such as, the pound turning off 20 and 80 levels being a frequent thing. It's one of those kind of nuances of the market that is kind of along those lines. But in this case, what am I going to do to use that level? Well, we don't have any rule that says a level has to be a certain size going into it, meaning, typically when we look for a level to form, we look for the market to push into it and then to make the strong rejection out of it. That's what makes for a very clear level. So if we had an open bias, we'd be using this upper level, no doubt. It's a great upper level. If there's nothing else around it, we would use a level like that. We would use it hands down for sure. But there's no rule about the size of the push into it. Technically, you could, if the market was trending down and made a very tiny retrace and then continued down, there is no rule that keeps us from using a level like that. We just don't typically use those levels because, you could really go off any point if you use levels like that. So that's why we don't typically do that. But in this case here, what I'm going to do just to get around the rule set here is I'm going to use the backside of this. And I'm going to go off this high, so I'm going to call this retracement. I'm going to basically say this is the retracement to the high, and this is the move off the high. So I'm going to say, do we have at least a 30% of the ADR push from that move? And we have a 30 pip push down. Even if you don't take that 5 p.m. spike, it's still a 25 pip push down, which is over 30% of the ADR. So is that kind of skirting that rule? Yes, but really, if you were going off exact tenths, you did have a clean break of that level. It's just the fact that we're using, again, a mechanical rule set. But the question you have to ask yourself with the mechanical rule set is, what's the principle behind this rule? What's the principle behind a clean break? Is this really not satisfying the rules of a clean break? And that's where common sense comes into play. But again, when you're learning, if you want a 100% mechanical, that's what I would recommend. But this is where I talk about a little common sense and real world application where I would still use a level. So in this case, just to keep it as mechanical as possible, we will be using this one candle retracement as the high. If you are learning level selection, do not pay attention to what I'm talking about in this level selection. Look at any other level we've selected today with the exception of this point. We can address this more in the room tomorrow, but going off this point, this is going to be going to 16, one spot 19, 16, and that means that we today have one upper point, one spot 19, 16. You won't see me do this very often, but when we don't have a clean break of a level, and it's very fractional, and I can do something like this, then you'll see me do it. So in this case, it's the only level that's between the 25 to 65% retracement of the previous day's push, and it is a solid point. So that'll be the level we'll look for the second push to occur down from, and that'll do it for today's daily market preview. I'll see you guys in tomorrow's room session, 9:15 a.m. Eastern. Look forward to seeing you guys there. Until then, happy trading.